Hey everyone! There have been a lot of things happening on the market very early in this year. We've had quiet days, we've had crazy volatile days, and everything in between. It seemed like every time I settled on a topic for a video, something new kept coming up that required my attention and had me change my plans. But of course, the biggest elephant in the room is January the 3rd. The most unpredictable and intense day, at least in my trading memory. Bitcoin took a temporary dive of over 10% in a matter of hours, sending the other coins into a frenzy, and that is the day I will focus on. We'll start at the end. This is what my dashboard looked like towards the end of that day. This is not the true final P&L, but it is very close. And once the numbers stopped rolling in these widgets, I saw the diary entry practically writing itself. Why is that? Well, let's see. The true final number for the day, specifically for the high volatility algorithms, is plus 1,267. Does that remind you of anything? Well, of course. This is almost exactly the number for my best day of trading from a few videos ago. On December 11th, I made 1,271. Which is a difference of just 4 USDT. That's why I wanted to compare these days side by side and see whether or not the same final result was achieved in the same way. Let's first look at the terminal, because the differences are evident even there. Here I have the same account open on both sides of the screen, with reports from December 11th on the left and January the 3rd on the right. I have them filtered to show only my high Bitcoin algorithms so that the flat algos are not interfering with any analysis. At the first glance, these days seem pretty similar, with around 200 USDT in P&L. Now let's dig just a tiny bit deeper. Look at the number of trades. 41 versus 101. Fees? 26 versus 57 USDT. Losses? Only 5 here, totaling minus 34 USDT, and here we've got 22 losses, totaling minus 205. That is 6 times the losses. Thankfully, there have also been profits, 36 here totaling plus 227, and 79 here totaling plus 411 USDT. As you can see, the difference in profits is quite a bit smaller, barely twice as much here on the 3rd of January. Buy and sell, also different in relative terms. Here in December, the buy side was doing better with ROE of 12% versus the sell side with the ROE of 8%. But in January, the sell side was doing better, ROE of 11.5 versus 8.8 on the buy side. What else? Check out the biggest loss. Here we have minus 12 USDT at minus 1% price delta. And here we have minus 24 USDT at minus 2% price delta. How about the largest profit? Here we have 24.5 USDT at 2.4% take. Oh, this is actually amazing, by the way. And here we have 15 USDT at 1.1% take. Not bad either, but way less impressive than here. Also, check out the average executed order size. I had 1100 USDT in my algos, except a few trades at the end of January 3rd. So here we have an average of 1058, while here we have 1019 USDT, which means that order fulfillment on January the 3rd was noticeably worse. Finally, let's check out what Bitcoin was like in those days. The candles here look pretty similar to me, except the shape of recovery after the drop. But the magnitude of the drops was very different. On December 11th, the change from the start of the drop to the lowest point was minus 8.7%. And on January 3rd, it was minus 11.5%. So the drop was substantially deeper. So as you can see, even from one account in the terminal, in terms of trading, the days are quite different, despite having almost the same exact final result. Of course, I did a large-scale analysis across all accounts, and the overall observations are actually very similar to the ones that we've made here on one account. I'll try to give you the most condensed version of the analysis, highlighting only the most interesting points. After slicing the data for hours and hours in many different ways, I came up with this summary. Here we have various indicators, here are the numbers for both days, and here is the difference where December 11th was taken as the baseline. As you can see, the P&L and ROE are almost the same, but we've already established that. Average executed order size is again smaller on the second day, same as we've observed in the single account. Now here we have more than double the number of trades, which in itself could be considered good, but let's check out the quality of those trades. We've got double the number of profitable trades, so far so good. But here is the kicker. We have overall almost 500% more losing trades, 129 versus only 27. This is a way bigger increase compared to the increase in profitable trades. Consequently, the profit-to-loss ratio dropped from a solid 9.5 down to only 4.06. which is less than half of what it used to be. Thankfully, the minimum required ratio in both cases was in the range of 2.2 to 2.3, which means we're still profitable, thank God. Interestingly, the average profit and the average loss are quite comparable across the 2 days. The average profit is slightly worse, and the average loss is slightly better. So this is not the main factor this time around. And here is the saddest number for me. Because there have been so many losses, the average P&L per trade went from 4.5 down to only 1.9, which is only 42% of what it used to be. The volume and fees are not better or worse, they are simply a reflection of more intense trading. Alright, so these numbers above can be seen as consequences. But what about the reasons? What was the market like? We've seen the Bitcoin graphs before, and the numbers here corroborate those pictures. The maximum 5-minute volatility went from 6.13 to 6.45, and the 15-minute volatility went from 7.39 all the way up to 9.08. I did suspect that my algorithms are not adapted to such high levels of volatility, and the numbers seem to prove it. Looking at the 5-minute Bitcoin ranges for January 3rd, we see that the only range finishing at a loss was anything above 6.2. And in fact, the higher we go, the worse it gets. Below volatility of 5, we keep having solid profit-to-loss ratios. And then from 5 to 6, it's only 3.2. And from 6 and above, it is 2.8. The very obvious first question is then, was my single distance of 1.7 not fully suitable for this type of market? Luckily, I have my data gathering algorithms to check that. They are not limited to any specific Bitcoin range and keep trading no matter what. And what's more important, they run at many different distances. So I did the same type of analysis on my data gathering reports. This is not truly a clean comparison because of the differences in setups, but I believe it is still valid enough. First of all, you can straight away see that the data gathering did much better on the second day, with more than double in P&L and ROE. The increase in losing trades was a massive 1000%. However, at the same time, the profitable trades increased almost 500% to compensate. The profit-to-loss ratio and the average P&L also dropped significantly. But thanks to the much improved break-even ratio, the final result is still better. Let's just take a moment to appreciate the fact that the simplest, dumbest active markets algorithms have done so much better than the meticulously constructed high BTC algorithms. And these dumb algorithms have made 257% ROE in a day. Makes you think, doesn't it? They do have one major advantage going for them though, and it is a grid of 6 distances instead of just one. Naturally, I wanted to know which distances performed the best, so here they are. Back in December, I wasn't running data gathering on 1.7 and 2.4, that is why there is no data here. But even if we take them out of January the 3rd, the P&L is still twice as large. Alright, the distances. In December, the most optimal single distance seemed to be 1.5. Now in January, 1.7, which I use for my high volume trading, is not looking so good in relative terms. The numbers say that 1.5 was better, 2.0 was better, and even 0.8 was better. Based on this picture, I would say that my choice of 1.7 as a single distance was not really optimal for the market at the time. It is still profitable, no doubt, and I am very thankful for the 1200 in profits, but apparently it could have been so much better. And if I were to stack two levels, let's say 1.5 and 2, it would have been magical. For some reason, I am reluctant to use 0.8 as a high volatility distance, even though it looks so tempting. Maybe I'll do a limited tryout for starters. It just seems too risky. So there we go. 2 days, same P&L, two very different types of circumstances. Now let's quickly go to Show Me the Money. This is my current dashboard as of the day of recording. Here I've added some color for clarity to the summary row, and here I have the total for last year and the overall total. The main area now refers to this month only. As you can see, yesterday was less than stellar, but I'm okay with that, considering that at one point yesterday I was at minus 40. But today so far seems quite fine. We'll see if it holds up. And the month overall is quite excellent. I haven't gotten today's numbers into the spreadsheet yet, but let's see anyway. So last time we were here at 25.79, and as of yesterday I am at 46.88, which is an increase of a bit over 2100. I'm pretty much drowning in coffee at this point. But seriously, I'm still in awe at how well this has been going so far. Absolutely stunned. As you can see here, lately I've been more actively trading with my flat algorithms at lower distances, and they've brought in a few hundred USDT as well. I'll tell you all about them in one of the next videos. So, what have we learned today? First, there are several very different ways to make the same amount of money. Some are more optimal than others. If you don't stop at P&L in your analysis and look deeper, you may find some potential for improvement. Secondly, it is great to have some basis for comparison for your performance. My data gathering has been very helpful in understanding what went on with higher volume trades. And thirdly, I personally feel enormous gratitude for how things have been going. And I will leave it at that today. See you soon.